But speaking of Apple, you know what was even bigger news? Katie Huberty over at Morgan Stanley made a bold call. 1 week before Apple reports earnings, 1 week, she publishes a piece suggesting that Apple has an attractive setup into earnings because, and I quote, investor sentiment remains negative despite improving iPhone and services data points, end quote. This is a gigantic call. Katie Huberty over at Morgan Stanley made a bold move of great significance. 1 week before Apple reports earnings, she publishes a piece suggesting that Apple has an attractive setup into earnings because, and I quote, investor sentiment remains negative despite improving iPhone and services data points, end quote. Holy cow, this is a gigantic call. Huberty is going totally against all conventional wisdom here. In fact, this very day, Tony Sacconaghi, he's the Sanford Bernstein Apple skeptic, published a note. It was a note explaining that the company could have weakness in the very same services division that she's excited about. Get this. Huberty believes this service is accelerated and could grow as fast as 16.7%. Sacconaghi thinks it will be more like 12.4%. That is decelerating. Meanwhile, the consensus is right in the middle. Now, because of Huberty's call, Apple ran more than 2% today. And while that may not sound like much, remember, you're dealing with a $950 billion company here. She has raised the stakes. On top of that, she also raised her price target from 231 to 247. Price targets mean anything? Yes, it matters. It matters because Apple's currently trading at just over 207, nowhere near her previous $231 target. So why bother to raise another $16? Insult to injury? I don't know. Is it superfluous? No, not at all. It's a line in the sand. It's a statement saying, I know I'm right. You're wrong. I don't like to jinx one of my absolute favorite stocks of one of my absolute favorite companies, but Huberty's call really messes up with the setup. We hate it in Mad Money when stocks run into earnings. I'm already envisioning Tony Sacconaghi coming on air and saying, oh, what I see the services are weak. Apple's best days are behind it after the company reports. Even if Huberty's right, the risk reward just got really bad.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.